And it's Business Morning, live on Channels Television. Great to have you join us. I'm Ladi Williams. It's a beautiful Thursday morning right here in Lagos. Let's take a look at what's in the news. The Securities and Exchange Commission has commenced the collection of income tax on fixed income market instruments such as bonds, treasury bill, and short-term assets. The move, which became effective on Tuesday, follows the expiration of 2012 Gazette, which exempted companies income tax from bonds and short-term securities in the past 10 years. Last month, the SEC in a circular announced the introduction of a 0.025% charge on fixed income secondary market transactions. Meanwhile, capital market operators such as the Chartered Institute of Stockbrokers, Association of Securities Dealing Houses of Nigeria, have expressed support for the move by the SEC. And now to the budget breakdown from yesterday. The federal government expects that the country will earn a total revenue of 10.7 trillion naira in 2022 fiscal year. This formed part of the budget 2022 breakdown of facts and figures as unveiled by the Minister of Finance, Budget and National Planning, Mrs. Zainab Ahmed. Mrs. Ahmed also revealed that the deficit in the budget will be financed partly by fresh borrowing, as well as also partly by proceeds of privatization. Do take a listen.
2022 aggregate federal government expenditure, including government-owned enterprises, project-tied loans, is projected to be 17.13 trillion. This is 18% higher than the 2021 budget. The recurrent non-debt spending is estimated to be 16.91 trillion, and this is 40% of the total expenditure and 30% higher than the provision in the 2021 budget. The aggregate capital expenditure is 5.96 trillion. This is 35% of the total expenditure of the budget. Again, this provision is inclusive of capital component of statutory transfers, government-owned enterprises, as well as project-tied loan expenditures. At 3.61 trillion, debt service is 21% of the total expenditure of the 2022 budget, and it is 34% of the projected revenue of the 2022 budget. Provisions to retire maturing bonds to local contractors and suppliers has been made in the budget in the sum of 290.71 billion, and this represents 1.6% of the total expenditure. This provision is in line with federal government's commitment to offset accumulated arrears of contractors' obligations dating back over a decade.
And joining us now to break it down is Professor Akpan April, Professor of Economics at University of Uyo. Great to have you on the program, Professor.
Thank you very much for having me.
Good morning and Happy New Year. Quite an interesting presentation yesterday. It's been titled "The Budget of Economic Growth and Sustainability." What were the key takeaways for you from the breakdown?
Thank you very much. Well, there are several takeaways, but let me say first, I am impressed that for the second time, there's been a timely presentation of the budget, because it's very important, meaning that from January, they will hit the ground running. Previous regimes have not done this at all, so that is a plus for this administration. My other takeaway is that there has been more of transparency in the issue of debt. The minister went in detail to explain the debt situation. Why I'm saying that is because for the first time there's been a thorough analysis of the debt situation in relation to the revenue of the economy, because we've been arguing for years that GDP does not pay debt, revenue pays debt. And she went very far and very deep in analyzing the debt revenue situation and ended up by saying that the revenue situation remains a big challenge for the economy. And they are going to make all efforts to raise domestic revenue and then the deficit to be financed through borrowing. So there's some improved transparency in the debt situation. Second takeaway, which the numbers we have to check, is that the non-oil revenue has been increasing, which is a plus. The non-oil revenue has been increasing, and this we've argued for years that the oil sector only contributes about 10% to GDP. The non-oil sector contributes about 90% to GDP. So if the non-oil revenue is increasing, that's also another takeaway on my own, as I see it. The other issue that I think should be emphasized is that there's now a link, at least based on the minister's presentation, there's now a link where the budget is now linked to the plan, which is very, very crucial. And I hope that will be sustained, especially the capital components of the plan is now linked to the National Development Plan, and that should be sustained. The other issue which the minister did not raise, perhaps for other reasons, is that the president assented to the bill, but raised a lot of critical issues, which I think the House and the executive should reconcile. The president mentioned the inclusion of several projects by the parliament and the reduction of also several projects. That should be addressed. Because we are entering an election year, even though the House has an oversight function, we need to know why they've done those things and its implication for the economy. Another important issue in my view is yes, go ahead.
All right, Prof. But you can go ahead, Prof. You can go ahead.
I would say that the other issue which nothing can be done about it for now is the assumptions. We are still so much dependent on oil. For now, maybe we have no choice, but going forward, we have to begin to reduce that dependence. The executive branch submitted the budget with the assumption of I think $7 per barrel, and the House added $5 more to increase revenue. That is a little bit dicey because even the World Bank is projecting $24 per barrel during the year. The oil situation is very, very volatile. We don't know. So the more we reduce dependence on oil, the better. And I'm glad that the oil revenue is, according to their own data, is now doing well. It's increasing, and I hope that will be sustained. My last, not my last point, is that it's a point of growth, but we should be careful because, as we see in the previous 2 years, the economy has technically exited the recession. Growth has been positive, but poverty is increasing, unemployment is increasing. So we don't want the next 2, 3, 4 years a recurrence of what I call jobless growth. Thank you for now.
Jobless growth. All right, Professor. The minister did say, we have a revenue problem, but some would say it's actually a spending problem. What's your take on that?
Well, it's partially a spending problem, but we can deal with that if we want to be honest. First, there's some areas where we don't really have a choice. The issue of security is very crucial. Given the security situation in the country, of course, we are going to spend more. But it's not just the spending and allocation on those items, but the outcome. Are we monitoring, are we evaluating the outcome of those expenditures? We could still cut down on the cost of governance, in my view. So spending is a problem, but they don't really have a choice for now because of the security situation, the human capital situation in the country. In any budget, the devil is in the details. If you go to the MDAs and check what is happening, you see that in most areas, we can still cut down on expenditures.
All right, and with a budget deficit of about 6.26 trillion naira, the plans of funding this is borrowing. And, we also have, the issue with ballooning debt. How do you see plans for financing?
Well, to be honest, the deficit is refinanced by increased domestic revenue mobilization and loans, as borrowing. As I always argued, nothing wrong in borrowing if you are transparent and if you are borrowing to finance capital projects that have long-run multiplier effects. So there's need for transparency in borrowing. If you have major infrastructure challenges which you have to deal with, then you don't have the revenue, then you have to borrow. But you have to make sure that you've done your analysis very well so that what you are borrowing to finance, that project will pay its way. the data the minister presented, the debt situation is not too bad, but it is in a sense challenging because of the revenue situation in the country. So you borrow to finance capital projects. You've done your arithmetic very well. You've done your physical studies very well. You don't borrow to spend on recurrent. And I think I'm sure they adhere to that principle. And then also, where's the money coming from? Is it solely from Eurobonds or from multilateral institutions? The deficit GDP ratio is within the acceptable benchmark approved by the Fiscal Responsibility Act. I think about 4% or 3.9%. So it's okay, but it's just that we need to monitor and get reports as to the projects that the loan is financing.
All right. Another issue is debt service to revenue ratio, being the highest in Africa. Should we be worried, and how can this be reversed realistically?
Definitely, we should be worried. You have a budget of about 17 trillion, I think, and you're using almost 3 trillion to service your debt, not even the principal. We should be worried. I think the minister raised that issue. We should be worried. How do you resolve that? You mobilize domestic revenue. One way of doing that is to ensure that your economy is a growing economy. You are creating jobs. When people have jobs, then they will pay tax. When they don't have jobs, they can't pay taxes, or they can't pay tax. So, you now do a mix of your domestic revenue mobilization and some well-planned, efficient external borrowing, perhaps from multilateral institutions where you're going to have concessional rates and long-term payment plans. It's definitely worrisome because when you are using about 3 trillion of your budget to service just the debt, not the principal, is worrisome. I think the minister herself alluded to that. And one way of solving that is to ensure that you build an economy that is creating jobs. And you see, the economy, there's also a confusion. The economy is not yet that diversified. The GDP is diversified, but not the economy to a large extent. If an economy is diversified and industrialized, then your manufacturing sector will contribute at least 40% to GDP. So either you export things you manufacture in your country, or you added value. But where your manufacturing over time contributes about 10% or less to GDP, you cannot say your economy is diversified. The GDP, yes, because you have 46 sectors, but the economy is not yet, in my view, that diversified. Once we do that and move towards building the industrial sector, when you are industrialized, when you have a complex economy, then you can mobilize revenue domestically, and also you can earn foreign exchange by exporting non-oil goods and services. That is how to proceed. And but don't forget that this is just a 1-year plan, but linked to a 1-year budget, but linked to the plan and implementing those items aggressively. Perhaps there's a light at the end of the tunnel.
All right, and the federal government in its plan to generate revenue is set to shift our focus from revenue collection to tax compliance, under the Strategic Revenue Growth Initiative, SRGI. What's your take on this?
I definitely agree that there is need to ensure tax compliance. There are so many Nigerians who are not in the tax net. So the point is that they increase the tax base. So many people can be in the tax net and they should comply with the tax regulation. And I think also another important issue about this project is that the finance bill of 2021 is very crucial, identifying areas where government can generate revenue. For example, they brought back the issue of excise tax, taxing carbonated drinks, which used to be a very major source of government revenue in the past. So I definitely agree that there is need to ensure tax compliance. But again, because a lot of the Nigerians who have the money hide in the formal sector. So there have to be some innovative way of taxing that sector to generate more revenue for government. So I agree with that aspect of the budget, that there is need to make sure that there's tax compliance and those who can pay tax should pay. But again, don't forget that it's a feedback mechanism. No matter who is paying the tax, companies, individuals, there must be quality service delivery.
Right,
not
and
ensure.
yeah, I'm talking about the pro health tax there. How would this impact, manufacturers of these drinks?
You mean the pro? Yeah. Well, you see, no question. Though the manufacturers will pass some of that tax to consumers, part of it. There's no question. But again, you bring revenue for government. I don't know. Some of you are too young, but in our younger days, every October 1st, we used to look forward to the fact that the price of soft drinks will increase by some fraction. So it's a good idea. Definitely, they will pass some to the government, but not much can be done. It's a normal, in any economy like ours, you have to enforce the excise tax.
And talking about passing on, you still have a taxation on digital companies, without physical presence in Nigeria. Take, for instance, the social media brands, that cost will also be passed on, I'm guessing.
That cost will pass on, but I don't want to mention company, but it is important that those companies that operate digitally should be taxed, and it's done everywhere. Even if they are hiding in the cloud, it should be taxed. But we should be careful how we go about it so that we don't discourage them from being in the country, but they should pay tax.
Well, how do we find a perfect balance for this?
It's difficult. I'm sure the delivery branch must have worked that out. It's difficult, but if we find a balance, they should engage serious consultants and assist them. But definitely, you need a balance. I agree. Otherwise, it can create problems for the economy. But definitely, you should pay some form of levy for being online. And again, you see, you are right in the issue of balancing because a lot of our youth are into the digital space. So you don't want to discourage them from participating in that space. So definitely, we must strike a balance. The idea is to start with a very low rate and then gradually increase the rate and not just hit them with the high rate because Nigeria is not the only destination.
Okay. And another issue, President Buhari recently appointed a new chief economic advisor, Dr. Doyin Salami. How do you see this move by the president?
I don't know. He's a good friend of ours. He's competent, but don't forget that he's only a chief economic advisor. He will advise how they will take his advice. It's a good move. It's better late than never. And I hope there will be good coordination between the chief economic advisor, the Minister of Finance, Budget and Planning, and other relevant economic agencies of government. The proper coordination. And so I think it's a good move, and I wish the chief economic advisor the very best, a good friend of ours, but definitely there's need for coordination. It's better late than never. And then, of course, with the PAC, he's also the chairman of the Presidential Economic Advisory Committee or Council. So it's a good move, and I hope they will listen to the piece of advice that he will give. You see, the problem with our economy is that we need to properly understand the economy, the structure. While we emphasize growth, we should ensure that growth itself is not development. You must, if you grow at double digit, you must sustain it for about 10, 15 years to have a dent on poverty reduction. That's why you are seeing that even when the economy technically exited recession in 2016 and 2020, look at the unemployment rate as we are now. It's like 3.3%. And yet we are supposedly not in a recession. So those are things that I think the government economists will look at. That the economy has recovered from recession. You are growing at 4% in the third quarter of last year, but your unemployment is at 3%. Your poverty incidence is quite high. Your misery index and discomfort index are also rising. And so that is where you need that balancing, and it needs a lot of strategic thinking by government. So one way of doing it is to, in my view, aggressively implement the National Development Plan, and at least, if nothing else, within that context, fix the power problem. Electricity supply in Nigeria should be fixed. If you fix that, and you have power for even 18 hours, a lot of things will pick up, and we'll be on the path what I call real recovery, and not just technical recovery.
All right, Prof. Just before I let you go, Prof, I want you to look into your crystal ball What's your outlook for the Nigerian economy for 2022?
Well, the outlook is clear. If all stakeholders do what they're supposed to do, let me put it this way. If we can address the security situation even by 75%, then the economy will make some progress. But it's a difficult year, to be honest, because you are entering into the political space. So politics and economics, which one dominates? Can we strike a balance? So it will be a tough year. I hope that no matter the politics, the players will ensure that the economy has the projects in the plan are taken seriously. So if we do that, and we can continue on the path of, for example, as I said, fixing the essential infrastructure like power, for example, then there'll be hope. See, the point is that we have to win back the confidence of Nigerians. Yes. People have lost trust and confidence in government. So that's the problem. If you can win that, then there is hope for the future. If you can't win the confidence of Nigerians, then we'll just be going through this cycle of decline, recovery, and so on and so forth. So all right, my projection is that there's always hope once you're alive.
All right, there's hope once you're alive. All right, Prof, thank you so much, Professor Akpan Ekpo, Professor of Economics at University of Oyo. Thank you for coming on the program. Happy New Year.
Thank you. Happy New Year to you too. Thank you very much.
All right, now after the break, commodities market update is next. Do stay with us. This is Business Morning. And now for commodities market update, we see oil prices lost ground today, falling from the highest levels in more than a month. Global benchmark Brent crude futures fell 63 cents to $80.17 a barrel, while U.S. West Texas Intermediate crude futures lost about 58 cents to $77.27 a barrel. All right, let's bring in Nosike now to weigh on this matter. Nosike, we're seeing major markets roiled last night. The crypto market, the oil market, all of them. What's going on?
There was the announcement by the U.S. Fed that come March 2022, in two months time, it's going to raise interest rates, and it's began the normalization of monetary policy. Given that last year and the year before, it had to, extraordinary monetary policy to galvanize the economic recovery, and about 15% of GDP in terms of money was pumped into the economy, and we saw the impact was inflationary, and obviously it's trying to do what it can to taper inflation, because inflation affects GDP growth. GDP growth in the US affects GDP growth globally. So the Fed is poised to take action, and markets are reacting to that action. Obviously, when the Fed decides to raise, when it raises interest rates in March, the dollar will strengthen. The dollar has an inverse relationship with commodities and markets, basically. So if the dollar strengthens, we expect commodity prices to weaken. That's oil, cocoa, gold even. So even it's not just
even the safe haven assets.
Yeah, safe haven. I mean, inflation in times of inflationary times, high inflation, people would go to a safe haven. They will buy gold. And but now we're clear that the Fed is going to raise interest rates, so everyone is looking for. I mean, yields are up. Yields in the U.S. are up, so looking for the highest, where you can get the highest return. So people are leaving gold, leaving commodities. So the prices are. It's some turbulence in the market, because you have some factors underpinning oil prices at the moment. Yes, OPEC said that they would continue with their plan to pumping an extra 400,000 barrels of oil every month up until sometime in July, where they would have basically on paper put back 10 million barrels of oil per day. But the markets know that some OPEC members have capacity constraints, like Nigeria has an issue with, had declared a force majeure sometime last week, or two weeks ago. And Libya, they have like 200,000 barrels of oil taken off the market due to some issues with some pipelines. So, OPEC Plus, they have capacity constraints about between 600 and 700,000 barrels per day. So that is underpinning the outlook in the market. And then again, the issues of U.S. Stockpiles, fuel stockpiles in the U.S. It's the picture being painted basically is that demand is slowing because of the Omicron virus. There were about 1 million cases reported earlier in the week. That's like twice the previous peak of about 500,000 in a day. That's 1 million cases were reported on Monday. So people are beginning to say, okay, if there's a surge in Omicron and seeing that stockpiles are not falling as much as we thought they would fall, so there's that slide in demand, meaning that people are not taking journeys like they ordinarily would. So typically that sort of news would impact the market significantly. But you have underpinning it is the news from the U.S. Fed. The underpinning is also the fact that OPEC Plus have capacity constraints and are unlikely to be short-handed by about 600 to 700,000 per day. So leaving oil prices above 80, which, like you pointed out, is almost a 2-month high at the moment. So yeah, it's positive for oil.
And I remember the Fed actually hinted about to about 3 hikes.
Yeah.
You know, this year, and this is the first.
This is the announcement. Of the first.
You know, and we're getting this reaction from the market. So when the other ones come, how do you see the markets actually?
The fact that we know that they're coming. The thing about markets is that the expectations are built into reactions. We know that okay, this is the first of 3. This is March, and we know it's going to happen. So all the other markets are factoring into, like you said, the crypto space. Okay, what's going to happen? There's still the factors that underpin the crypto market are still the things that you can't really hold on to. It's supply and it's demand. We don't know who has the supply. We don't know who has the demand. We don't know what announcements they're making. We don't know those things that ordinarily underpin a market. We don't really have. It's not clearly stated. So there's a lot of volatility in the crypto space. So that announcement by the U.S. Fed and yields rising, there's a lot of movement from the crypto space. So that's going to happen over the course of the year, and depending on how not just how even emerging markets respond. Because if you raise rates in the US, what will happen is that you see a lot of liquidity, a lot of funds, capital flow reversals from emerging markets going back to advanced economies because of higher yields. So these emerging markets may raise their interest rates to attract funds back to their economies, and you might see a lot of currency volatility in emerging markets and central banks responding, trying to protect their own interests. So there's a lot that is poised to happen over the course of the year, and it'll be interesting to watch.
Is it safe to call 2022 maybe the year of the bear?
I don't think so. I honestly don't think so at the moment. Like I said, a lot of things are already being factored in, and so I mean, oil prices. We have forecasts of outlandish forecasts of up to $120 a barrel that may be underpinned by. I mean, even now the outlook on the demand side because of Omicron is looking as if okay. So people are asking questions: how transmissible is this disease? Is it like the previous ones? Is it as the vaccines available, are they as effective on the Omicron? And there's news of even a newer variant. I'm uncertain as to what the name is, but
it's quite an unusual name.
Quite an unusual name. So yeah, so all those factors will come into play. But we know that the world is learning to live with the pandemic, and we expect the global recovery to continue. Even OPEC has come out to announce that they expect oil demand to reach 100 million barrels a day this year. Total demand for the year, 100 million barrels per day, as opposed to somewhere about 95 million barrels a day last year. So that's an increase in demand. So you have supply constraints. On the supply side, have constraints. So that's positive for oil. So it's not calling it a year of the bear. I think it's too early to say.
Too early to say.
It's too early to call.
All right. So manufacturing purchasing manager index fell from 57.4 to about 55.9 December. First of its kind. You know, you'd expect festivities.
Yes.
You know, the manufacturers will be more busy. What do you think drove this?
Basically, it's the uncertainty surrounding the Omicron. When we heard news of the Omicron in late November, early December, manufacturers, they had to take a step back. Okay, because you begin to wait. There's on the supply side from them. Okay, like the questions I raised earlier, how transmissible is this disease? How is the government going to react? Are there going to be restrictions? Are there going to be...
The dreaded word, lockdown.
Lockdown, supply chain constraints, all those scenarios were being painted, and, you know, you would cut down on, okay, you don't want to overproduce, and then again, there's the demand side. We know that the Nigerian consumer has been embattled, stagnating incomes, high inflation. So there's also that is supposed to underpin whatever we produce, people will buy. So that consumption being lower, manufacturing output fell to basically try to match the consumption. So obviously there's forex constraints as well. The constraints that existed before the Omicron virus, all those things, all contrived to give us a PMI that was lower, a 7-year low at this time of the year.
And Eurozone wasn't left out. See, that one fell by 53.3 points, hitting a 9-month low too.
Yes, the services sector was chiefly responsible for this. So as typically people would go out, if the economy is open, people would go out to restaurants and everywhere, and the fear of the Omicron virus, a new surge, and the numbers are rising, so people are more laid back, people are at home, people are anticipating movement restrictions and all of that. So all of that came into play, and we saw the services sector take the biggest hit in the Eurozone.
All right, I see also one down at the food commodities are up, you know, from chicken, turkey, rice. And I'm thinking festivities are over. Why
oh, yeah, I mean, festivities are over for some people. Some people still have till the end of, till Sunday. I mean, work for most people starts on Monday. Right. The economy, for the manufacturers, most people.
Everyone was like
expect, you know, everyone was like you. We expect Forex demand, for instance, to pick up next week. Forex supply. CBN will start its intervention in Forex market by next week. So we expect, as the economy picks up, the prices, the festive season demand is still keeping prices elevated. But as the economy picks up, as the festivities end, the demand would fall and the prices would taper down as well. But there's the fact that we're entering the planting season, right, so to speak. There's that effect, the planting season effect, will keep prices a bit elevated.
All right, and also the Naira weakened at the parallel market, about 569 to the dollar. What's happening in that space? Okay,
like I said, manufacturing activities, business activities resume next week. So right now, there's, as much as there's low dollar demand, there's also low dollar supply. There's also this recent official devaluation by the CBN. You know, last year, something similar happened, and after a while, they took it back to what it was. It was 379, they went to 410, they took it back to 379. So the market is even waiting to see if this is a proper policy shift, so that the market forces can react appropriately. So, and if by next week we expect to see increased Forex supply at the official market so that manufacturers can get Forex. We had President Buhari come out sometime last week and gave a directive, in quotes, to the CBN to supply more Forex to the manufacturers. If manufacturers can get Forex at the official rate of 435 as opposed to the parallel market, you have less demand at the parallel market, and we'll probably see an appreciation in that market and continuous convergence of the two major markets, the official and the parallel market.
All right, it seems like we'll still be having the same conversations from 2021, the way it's looking with Forex and all of that. Nosikin Wajide, thank you so much. Analyst, Financial Derivatives Company, thank you. Always great to have you. All right, we'll take a moment now. All right, it was a green market yesterday. Let's hear more now from Aniete.
Yes, good morning, Ladi.
Morning.
Yes, I'm not an investor, but I must tell you, I'm beaming with smiles for the stock market. And you want to know why? That's because in just 2 days, it has gained about 1.13 trillion naira, and that comes on the back of profit bargain hunting for some of the market bellwethers. We had 243 billion naira gained on Tuesday, and then we had 243 billion naira gained yesterday and 887 billion naira gained on Tuesday. That amounts to 1.13% billion naira. Now take a look at the percentage gain, 1.05%. That's what it recorded on Wednesday midweek trading session. And of course, the year is already starting in the green. We didn't see any Santa rally in December, but of course, maybe Santa is coming a little bit late. So, of course, we're seeing the green colors, and that green color, well, it's mostly red in sectoral performance, but it came largely on the back of Airtel Africa, as well as Oando and some other oil and gas sector components, which rallied that sector by 3.12%. Of course, the other ones were deeply in the red, particularly the industrial goods sector. Year to date, we're up about 1.70%, and then that's just so far for the month. Now, when you take a look at the volume had a 472.75% surge, which came largely on the back of the listing by introduction of Bua Foods on the trading list of the Nigerian exchange, and that accounted for more than 95% of the total volume of transactions, 1.24 billion units of shares traded in midweek trading session. And of course, Bua Foods, which is a subsidiary of the Bua Group, had about 1 billion units of the total turnover of volume transactions. Value was very much in the green, 42.96 billion naira, but the deals were slightly lower at 4,032. So we would be having our guest, our analyst, Mohammed Kaide, who's a stockbroker at APT Securities, to tell us more about what happened at the market yesterday, and then, of course, what to expect in Thursday's trading session. The market is already in trading, and of course, we will keep our eyes out on how investor sentiments are turning out in intraday. Now, let's flip over to the fixed income market. It's not too much. It's nothing much going on there. It's still a bearish, mixed sentiments there. We had 16 deals for the total turnover of transactions. So I understand that we have Mohammed Kaide, who's a stockbroker at APT Securities. Thank you for joining us, Mohammed.
Good morning. It's a pleasure to be here with you on the program.
Okay. And I must say, Happy New Year. Okay.
Thank you very much.
Okay. So yesterday we saw Airtel Africa, continuing or lifting the market further into the green. We had 1.05% increase, as well as which adds to the 0.73% that we had on Tuesday. So what is the investors' sentiment towards the newly listed Bua Foods, and then what are the stocks that are driving investors' appetite in Thursday's trading session?
Thank you very much. It's a pleasure to be here with you on the program. And the surge we've seen in the Airtel is expected. And since that time that Airtel has been granted the PSB license, and the Airtel and MTN the PSB license, and since that time you have seen the upsurge in the price of the stock in the market. And it has started since last year, and it's now continuing up to this year. So it's expected. And yesterday you saw the upsurge in the value traded in the market, and also the volume traded in the market. It's as a result of the listing of Bua Foods. Bua Foods was listed yesterday, and it becomes the second most capitalized stock in the consumer goods after Nestle Foods. So in this instance, you see a situation whereby the stock traded more than 1 billion units yesterday, and it has pushed the value traded yesterday to around 2 billion, 2.4 billion. And if the stock was discounted from the value traded yesterday, you see that market ordinarily traded around 1.4 billion. But because of the contribution of what Bua Foods traded yesterday, and the expectation of investor and the appetite of the investor towards the stock, see a kind of 10% gain in the stock, and because the stock listed around 40 naira, and at the end of the day, it gained 4 naira, and it's closed at 44 naira. So this is what happened in the market. Investors have shown too much appetite for the stock, and that's the reason why we saw a kind of pattern that we experienced in the market.
Okay, so now we've had 2 positive trading sessions since the market resumed for 2022 business year. So do you expect this positive trend to continue into the remaining part of the week, today and Thursday and Friday? And then, of course, is there any cherry-picking activity by investors?
Yes, I believe that we opened the year on the positive note. I believe that the year is going to continue at the beginning like this. You have to bear it in mind. Towards the later part of this year, we are going to start the electioneering campaign, and you see a kind of investor running away from the market because of the fact of the political atmosphere, and that one has a direct impact on the. It has an inverse relationship on the market. Whenever the activity is in the political space is becoming serious, you see that a lot of investors will be dumping their shares in the market, and that is expected. So we expect that early this year we should kind of see this kind of traction. You see the upsurge in the market. I believe that even not only this week, this quarter may likely close positive, as we have seen it, and I believe that towards the end of the year, we start to see the investor dumping into the market because of the political atmosphere that may likely kick in towards the last part of the year.
Okay, so thank you for that wonderful analysis, Mohammed Kayode. Always a pleasure having you. So that was Mohammed Kayode, stockbroker at APT Securities Limited. So, Ladi,
yeah,
well,
quite,
of course,
quite an interesting session yesterday with, it was all about Boer foods, apparently.
As well as Airtel Africa.
And
don't forget
Africa.
that.
Yeah.
Exactly.
All right, Nite, thank you so much. All right, we'll take a quick break now. Business Morning returns in a moment. Do stay with us. Welcome back. Now we head on to London with Juliana. Great to have you, Juliana. So we see stock markets taking a tumble after America's central bank revealed it could raise interest rates sooner or faster than expected. How's it looking in the UK?
Yeah, pretty interesting. Of course, as soon as we hear some significant news such as this from the world's largest economy, all other economies follow suit. Last night, the Federal Reserve released minutes from their last policy meeting in December 2021, basically having a good look at the robust labour market that's currently taking place in the United States. Of course, we know that inflation is soaring. I believe it stands at about 6.1%, which is the highest level of inflation in almost 4 decades. And as well, the economy is still recovering quite swiftly from coronavirus lockdown. So they are insistent that they will need to rise interest rates this year. We're expecting possibly 3 interest rates as soon as March. There was a complete sell-off following the release of these minutes yesterday in Wall Street. NASDAQ, which is a pretty tech-heavy stock listing, the share price fell by 3.3%. We also saw similar scenes in Hong Kong and in Shanghai, taking its cue from what happened in America. And of course, here in the UK, there were losses too. So all of the gains that we saw at the start of the new year have been completely wiped off. And this is because what Jerome Powell and the rest of the Monetary Policy Committee were observing in the US is pretty similar to what's happening all across the world, particularly here in the UK. We know that inflation is rising. Businesses can no longer take the price rises on their own. They are starting to trickle down to the consumer. One of the ways to abate this soaring inflation, which is no longer transitory, a word that we said we're going to dump in 2021, it is going to last a lot longer. The only way you can do this is by trickling it down to the consumer, and to abate this, you have to rise the interest rate. So that's expected sooner rather than later.
Right, I guess it's fear in most of the markets right now. Let's look at fashion. You see, British clothing retailer Next has lifted its full-year report, year profit outlook again after beating its sales guidance. Crucial Christmas trading period. Tell us more about this.
Yeah, Next has done incredibly well. I believe Next, as well as the popular fast fashion online sites, as well as JD Sports, they've really bucked the trend where the British high street has really struggled before the pandemic to kind of compete with the online titans. Next has been doing exceptionally well. In fact, some would say it's Britain's best run business. They've released their data. They've been the first retailer here in the UK to release data on Christmas sales, and they show that it was actually 20% higher than it was pre-pandemic. So they're getting lots of sales online. So many people are going into their high street stores. They typically usually have customers that are queuing up at 5 o'clock in the morning on Boxing Day when sales are beginning to start. And that's really paid off for them, so much so that they have lifted their annual forecast from 800 million to 822 million pounds. And this is despite bosses saying that supply chain disruptions really did hamper their sales. They could have made more if there were enough HGV drivers, if the supply chain disruptions and the bottlenecks at the borders weren't affecting their clothing labels. A really good positive story, particularly for the beleaguered high street. And it kind of doubles down on the data we discussed yesterday from Kantar, the retail analytics, that did show that despite high levels of inflation, people in the UK are still spending those pounds trying to look good in the new year.
Trying to look good in the new year. All right, Juliana, thank you so much. Enjoy the rest of your day.
Thanks, Landy.
All right, time to look at the crypto market. We see major markets in the red, crypto market not left out. We see the price of Bitcoin fell below the 44,000 level shortly after the Federal Reserve's December FOMC meeting notes reconfirmed efforts to regulate the balance sheet. Well, see market cap there, $2.05 trillion. See that market cap looking like it wants to go below the $2 trillion mark. It's down 8%, 24-hour volume, $128.70 billion in the total crypto market. And we see Bitcoin dominance there, 39.70. Let's look at the price of Bitcoin. Right now, $43,178 this morning. Major slump there, down 7%. Volume traded, $42.27 billion. Imagine all these shorts that were liquidated there, the longs. Price of Ethereum, $3,461, down 9.32%. Volume traded, $22.54 billion. Let's bring in Paul Oladeji now to tell us what's happening. Hello, Paul. Good morning.
Yeah, good morning.
Yeah, I see it's blood on the streets in the crypto market. How are you seeing it?
Yeah, it's actually normal. There's been a lot of sell-off recently, so it's a normal thing in the market. We've been having a pullback.
And how are the NFTs looking, and all those coins that were actually looking pretty good?
Yeah, NFTs have been popping too. NFTs have been popping recently. Since the beginning of this year, we've been seeing it like it's been looking like NFT season 2. But the current drop in the market is actually affecting the floor prices of most NFTs too. So they're actually going to crash a bit further too before we have another bounce probably.
And I'm sure a lot of longs got liquidated. What's it looking like there?
Oh, yeah, of course. Yeah, we had a lot of liquidated longs. I think in the last 24 hours, we had about $287 million in liquidated longs alone in the market. So that's actually a lot. So I think we also had some due to the according to the open interest too. We had about approximately $315 million liquidated in the market too. So that's quite a lot too. It's been a bad season for longs at this moment.
And experienced traders say buy when the market is fearful and sell when it's greedy. What are you doing?
Yeah, buy when the market. Yeah, I understand that too. Like buy the dip, sell the top, those kind of things. But sometimes too, one has to be very careful too, because like one has to monitor price too in order not to catch a falling knife. Okay, it's not every dip that one actually has to buy. There are some periods one has to stay out of the market and let the market do its thing before one actually looks to re-enter too. But for those who seem to buy on the long term too, they can actually dollar cost average. They can DCA. They can like buy in bits too. Like for instance, Michael Saylor acquired about 1,910 BTC or so for about $94 million. That was just back in December too. So I think he's someone like who executes that ideology well, in the sense that he keeps buying either the market rising or falling, and now his average enterprise is about 30K, so it's still profitable. So at the same time, too, for those who are looking to buy cryptocurrencies on the long term, this might be an opportunity for them to get in.
All right. I guess Michael Saylor has the heart and the money for it. Thank you so much, Paulo, digital market analyst. Always so good to talk to you. Thank you. All right, now let's look at the top losers. Let's go to the top losers real quick. It's quite red there. We see Elron there, down about 17.58%. Axie Infinity, down 17.11%. Double-digit losses all through there. Quite a scary one there for traders. All right, that's it on the program today. Thank you so much for watching. Don't forget, you can join us at 1:30 on Business Incorporated for more updates and developments in the world of business. I'm Ladi Williams. Thank you for watching. Bye for now.